Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. This week is another blockbuster week of economic data. Along with that, we've got much volatility coming right across the board, with the Australian dollar plummeting to the lows around 62.80-85 on Friday, while the dollar index, which measures the greenback strength against a basket of 6 major currencies, surges 106.54 and settles in New York at 106.45. Looking to this week's economic data, we've got the RBA governor speaking, and also we have the Fed Powell speaking. Along with that, we've got China's GDP, industrial production, and also out of the UK, we've got the CPI and retail sales. Also in Canada, we've got the CPI, while back home in Australia, we've got the unemployment numbers, and also we've got the RBA minutes. So as the dollar stands strong, the Australian dollar is pressing on this level, which is seen at 62.85, and a break there will give further scope down towards 62.30. But we're getting somewhat oversold, so I feel the market may soon eventually find a short-term base and stage of bounce. Looking to the euro, the market rejects that top side on Thursday around 106.25 and now looks lower towards the region, coming in at 104.65 to 104.10. Not going to get too bearish on this market. I feel it's just playing in this down channel, so therefore demand is likely to come back from the low 104 region. The dollar yen, the market is still pretty much hesitant to take on that challenge around 150, as rumours of the BOJ still lurking around and likely to be, and if so, could see that challenge rejected and look back towards the bottom side of the range around 147.5 and reassess. Not too much in terms of direction, but likely to trade in a continuous sideways pattern until we get a little bit more firmer stance, which I feel will be bearish, and eventually take out 147, look down to 144. Sterling also rejects the top side of that key channel, which was around 123.5, and now looks back to the bottom side of the range for this week, seen around 120.20. Overall, though, I feel the market may actually stage another bounce, so I'm not going to get too negative, as it's quite a sharp downturn, but likely to be a very brief one and stage bounce. A $60 rally in gold sent the market all the way back to the high seen in September, and now with the Marubozu candle placed, could see a further gain, and that is up towards 1,946, and with a cap likely to be staged where the bears are, around 1,954 to 58. The market is still somewhat rushing to safe haven demand due to the conflict over in the Middle East, so therefore we could see a bit more topside action, and there's sort of press on towards that resistance around 1,900.5 and then eventually reverse. And finishing up with oil, the market rebounded off those lows late last week at 81 and now looks towards the topside challenge, which could be as far as $90 a barrel. The reason behind that is the market is very strong in this comeback, and therefore a break above that 86.80 pushes on towards 87 to 90 as a potential target. And before then, the market no doubt will be displaying shallow pullbacks, so limited downside and more gains to come for oil this week. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new week.